Good morning. Good morning. Thank you for joining today's session. Welcome to today's edition of Frugal Thieves. Let me get myself situated. Welcome, welcome. I am a little excited for today's show because we're having not one, but two people on today's show, and both of them are um, professionals in their field. So we're going to be talking to them directly. The first person, Daniel, who you should be used to by now because he was on the show last week. The other person being, we have someone new coming on this week called Benjamin. I am excited because he is a mortgage loan expert, so he should be able to kind of give us the ins and outs of financing our mortgage. So feel free as you join, invite your friends, invite your family. Let's have a great session today. So while you're sharing, I'm going to take a moment and make sure my guests are ready to join me. So while you're waiting for me to come on, feel free to share and invite your friends and family. In the meantime, let me just do a few housekeeping things. I was able to actually get my lighting. As you can see, it's much brighter and much better today. So hopefully this sticks along and we can have a great time. Welcome, welcome if you're just joining. Today we're going to be talking about the real estate. We're going to be finishing the real estate purchasing and then financing. So we're going to be talking about the financing more in depth today, and we're just going to be finishing off the purchasing aspect we started a couple of weeks ago. Now, if you have any questions, please post it down below. If you have any questions, post it in the dialogue box. I'm going to see it. My guests are going to see it, and we can hopefully have more time today to answer all your questions. So feel free to post and share with your family. In the meantime, it is October 31st today. As shocking as it may sound, the year is almost over. We have just 2 more months, 60 days till January 1st, or more like, 60 days or 62 days till January the 1st. So we have a whole lot to cover. We still have a whole lot of ground to cover before the year runs out. So if you are still not completely done with your goals that you set for this year, don't panic. You still have some time. It's been a strange year. It's been an unlikely year, but I mean that's no problem. Part of having goals is that you're able to maneuver around those goals, and that's why it's very important to have SMART goals, because your SMART goals are editable. What do I mean by that? You can edit them as you go along and fine tune them to fit whatever environment we find ourselves in. So make sure you're still looking at those goals. We covered a lot of financial topics at the beginning of this year. Well, starting from May, June till now, we've talked about credit. We are coming up on the end of the year, going into tax season soon. So if you haven't gotten your credit tightened up, get your credit worked on. That way, going into next year, you're much more situated, especially if you want to purchase a home. Going into next year, you're much more better placed. So credit, work on that. If you're thinking about investing, make sure that you are just kind of saving and clearing your debt. That way, when it comes to next year, you can hit the ground running. So what else? What else? What are some things that you think are important for us to start working on this year? And so when we get into January, we're ready to rock and roll. I was listening to something yesterday, and basically what they said was the year does not start in January. Planning for the year does not start in January. Planning for the year starts basically you should by the end of November, you should be done with this year. So by the end of November, you should be done with worrying about this year, planning for this year. So your entire month of December should be set aside to plan for January. So when January comes, that's not when you're writing your that's not when you're writing your what is it, your goals. That's not when you're writing your to-do list. So you want to start doing that in December. Okay, so enough of that. If I think about anything else that are quick pointers for us to start thinking about, I will mention that as we go along. Now, I believe Agent Dan is ready to come on so we can continue from where we left off the last time. If you haven't shared, please share with your friends and family. We're going into a new year, into 2020. So this information that we put out every weekend has to reach a lot of people. So both my guests are ready, both Agent Dan and my guest Benjamin. So I will be bringing, I'm going to bring both of them on and then have them say hello, and then I may drop off one person. So bear with me. I will be bringing both of them on. The first one being Agent Dan. Agent Dan, welcome. Good morning. It looks like you're in Hawaii. What's happening?
I'm actually in California, guys. It is a little bit,
California.
yes, still early out here, but I am always excited to talk real estate. You wake me up in the middle of the night, I will talk real estate. So when you keep calling, I had to answer. And here I am, guys. I am looking forward to having a nice time with you all and answering all your questions.
Perfect. Thank you, Agent Dan, and thank you for your commitment to joining my show. It is California. It's 9 o'clock there, right? So you
It
probably
is.
are pretty awake early. Well, no, we're gonna try to get through this, so maybe you can go back and have a nap or something, or have the rest of your day.
Um,
The next person I'm gonna be bringing on is my guest, Benjamin. I am quite excited to have him on the show today. Why? Because he's gonna talk all things as much as he can, as far as the real estate mortgage financing process goes. So I'm gonna bring him on to introduce himself, and we go from there. Hi, Benjamin. Welcome.
Hi, hi. Good morning, everybody. Nice to be on the
Good
show. Thank you.
Good morning. Thank you for joining. I know we just kind of rushed you last minute to come and talk to us. So I really want to appreciate your time. I know but both yourself and Agent Dan are very busy, especially in this environment and with what you guys do. So I want to thank you so much for joining today. So I know we had Agent Dan coming about 2 weeks ago. Just give us like a 1 minute debrief of yourself. Introduce yourself to us. Who are you?
I'm sorry, I didn't really catch it. Is it Ben going or am I going first?
Agent Dan, sorry.
Oh, absolutely. Hey guys,
Yeah.
I'm Agent Dan. I am a licensed realtor in the state of Texas. I do all things residential and a little bit of commercial. If you're looking to lease out the space, I do that as well. Most especially first-time home buyers because the process could be daunting. It could be a little bit challenging, but I consider myself as the one that would hold your hand and work with you from start to finish. So that is what I do.
Perfect. Thank you. Thank you for that very concise introduction of yourself. Once again, everybody, Agent Dan. So we're going to move on to Benjamin. Just give us a little brief about you, whatever it is you want to tell us about you and what you do.
All right. My name is Benjamin Oluwole. With GTA Mortgage here in Houston, Texas, but I'm licensed to do loan all over the United States of America. Loan is one thing I love to do. I like to get people into their home, like Agent Dan. So what we do is this: he looks for the house, and we get you the finances that you need to get a loan, and that is what I love doing. Getting you, I help you from the very process of you getting qualification and you closing the deal.
Perfect. Thank you. And you're just exactly the person we needed to speak with this morning. Okay, so what I'm going to do is this. I'm going to, Agent Dan, just pause for a second. I'm going to drop you off. Go grab a
Mhm.
coffee, relax. I'm going to start with Benjamin. That way we can really get to talk to him. And then I can let him go do whatever it is he has to take care of. It's Saturday. It's usually a busy time for you guys. So, Agent Dan, thank you. Just stand by. Go do whatever you have to do. I'm going to drop you off now.
All right.
All right. So Benjamin, thank you so much for joining us. And I know it's your first time in this show, so I really want to appreciate your time. I really want to say I am looking forward to what you have to share today. So the last time we spoke, I spoke with Agent Dan. He talked about the process of purchasing the home. He gave us the ins and outs, the pluses of buying a newly built or buying an already existing home. So I want to talk to you from from a financing process. So let's just say I found my dream home. I haven't gotten pre-approved yet, or maybe I haven't gotten pre-approved. Well, what would you recommend to get pre-approved first before you find your dream home, or find your dream home and then try to get pre-approved, approved for a home?
The first thing to do is to get pre-approved first, because when
Okay.
you get pre-approved, you reduce the workload on the real estate agent. Because you
Mhm.
might want to have a mansion, but your financial capacity does not allow it at that moment. So the
Mhm.
first thing to make the workload very easy for you and the real estate agent, and for you not to be sad, after getting
Mhm.
the house, and that is not what the bank is willing to finance you for, and you get so sad, and you start getting discouraged. Get a pre-approval first, which is very, and there are several kind of pre-approval.
Oh.
Some people can give you pre-approval just giving you like that. They'll tell you how much do you feel. They just get you just do a quick scan on your document and just give you pre-approval, and
Okay.
they get you excited without checking all the necessary documents. And
Mhm.
after a while, you find out that you are not really qualified for that particular amount. Then there's another kind of pre-approval whereby there are several things that will be checked. That means that they already checked your credit, they checked your income, they did a background check on you, and they find out that, okay, this is what you are really qualified for at that particular one. So sometimes some of us just do a very rush one. Somebody you just call. Some company now can give you pre-approval by phone. You just call them, and that is not something to rely on. So you don't want to just take that paper and go get yourself the house that they say, and on the long run, you don't really get a house. And the excitement of it, it can be
Mm.
really emotional when you don't get a house or when you are
Yeah.
turned down. So you want to make sure that the pre-approval, it has several things tick there, that your finances was checked, your credit especially was checked, and several other things was checked about you before you start heading down to. And when you have that, it helps the real estate agents to know exactly what to look out for you.
Okay. All right. So you want to come in to the home purchasing process with your pre-approval already in hand. So what is that second type of pre-approval called, where
Yeah,
everything gets
well, it doesn't have a name specifically, but depend on who is doing it. Now, they call it pre-qualification. The pre-call, they can just give it to you, like, you get to a bank, you want to do a loan with them. You say, can you give me a pre-qualification for
Mhm.
a house of 300? And they say, okay, no problem. They just look at it. They say how much you earn, and they can just calculate that based on your income and just say, okay, you are qualified for that, without checking the proper document. So whenever time you want to really know that your pre-call is what your pre-call should be, is when the loan originator actually checks certain things about your loan. They did it
Mm.
about the loan and they gave it to you. They asked you several questions. They did that. They pull up your credit. They checked your statement. They checked that. They checked a lot of stuff, and they give you the pre-call. Those are the kind of pre-call you want to bank on. Not that you just give you a pre-call and before you know it, that is not it. Most times when I was also in the real estate with my wife, out
Okay.
of Wale, Yeah, I also work with Agent Dan. Also, we all work one hand in hand. So I know how it is when some clients come in and just show you that pre-call, and you start looking for house, and when they start running the figure, you find out that they think they qualify for a house of 300. They give them a pre-call of 300, and they are actually qualified for a house of 250. So you see that you're running around, you just find out that you have to lose that contract, they lose their NS money and all that. So for you to know that your loan originator have done a good job on your pre-qualification, they must have asked you those vital questions. They must have taken those documents. And some of those pre-qualifications, you see, it has a tick there. Oh, we've checked your income, we've checked your credit, we've checked every other stuff. They have a tick. You have like 5 tick there, things they collected from you and they verify. So you know, yeah, you can bank on that.
Okay, perfect. Thank you for breaking that down, because I've always wondered about the pre-qualification. You see, especially nowadays, you see that a lot where a bank or a financial institution says, "Oh, just pre-qualify for a home," and bam, immediately they give you something and you take that and run off happy. So a point to note is that you want to be sure that they're actually checking your documents. That way you're not disappointed when you go find a house and then the financing comes a lot under basically how much house you can afford is not what you got pre-qualified for. And then you said you lose your earnest money. Can you explain to me what earnest money is and what the percentage is?
Oh, okay. I believe Agent Dan must have explained that in the last section. But
okay, so
earnest money is is a kind of money you put down to show that you are serious about buying the house.
okay.
Initial amount of money you put down, it varies. It doesn't have a specific, like, it varies. So when you put down the earnest money, they take the house out of the market. So that earnest money, you stand a chance to lose the earnest money if anything happened after some few days. I think they give you a range of time. You stand the chance to lose the earnest money. But when you take such pre-qualification and put your earnest money and you start losing those earnest money 1 or 2 times or 3 times, you get discouraged. So I believe that is what this program is, so that you can have the adequate knowledge about it, so you can go. Ensure you speak to. One thing I find out about house buying and the loan process, ensure you communicate with somebody that is down to earth to educate you about everything. I always tell our people, when I talk to people, we sit them down and educate them, and ensure you work with somebody that is willing to go through the process for you back to back. Like, I woke up this morning, I have this one that was working 5 a.m. I started working on this client because I know the client. So work with an agent that takes you as a family. What they will not do to themselves, they will not do to you. They want to go extra mile, in doing that. Such kind of agent will look at your pre-qualification and want to call your bank or call, like, okay, is this back to back? Is this really, have you checked certain things before they embark on it? So that, because home buying can be so emotional, you can because the house itself is a feeling you have. So buying a house is a feeling, not actually the worth of the house. You are not carrying the worth. It's just a feeling you have. So it's something emotional. So whenever time we attend to clients, we tend to know that their emotion is involved in this. It's what they call happiness. So it's involved in this. You can make them sad. You can make them. So that is why you have to ensure that your banker actually check properly.
Perfect. Wow. Thank you so much, because you did mention some very important points. Starting with the last one you mentioned, emotional. It's an emotional process. Generally, working with people and either their finances or helping them fulfill a dream or a goal is always an emotional process. So you want to be sure that if you're working, whether it's with an agent or a financial advisor or a banker, make sure it's somebody who treats you almost like family. Okay, I'm not saying the person has to be over at your house every weekend, or something of that nature, but make sure you get the same way when you walk into a house and you get the feel for the house. When you have to work with an agent, get the feel of them. See if your values align a little bit. See if they understand what you're looking for and what you're needing. So, and you also, like he said, you also want to find somebody who can educate you. Education is key. So even if you walk out of that process without really purchasing a house at that time, if you had to embark on the process again, you're much more educated than when you began. So education treats you like family, or they wouldn't mess you up basically, and somebody who can understand what it is you're looking for, because it is obviously an emotional process. Thank you for outlining that, because it's almost the same thing that Agent Dan said the last time he was here. He was here on with me. So moving on. So you've talked about that process. Say I walk into your office with all the proper pre-qualifications, and I found a dream house that I like. Where do you start from? Can you talk a little bit about maybe how much the percent of the mortgage that you think it's a good idea to put down for like a down payment? If you can speak on that just a little bit, but just kind of walk me through how you start with a client like myself.
Okay, when you walk into the office, we start with you. I already explained about the
Mm-hmm.
pre-qualification process. There's what they call the DTI, debt to income ratio. That is the place where a lot of people fall short. Your debt to income. I love the way it is debt to income. Sometimes we don't prepare for the future, so we gather a lot of debt. They are giving free cars. Get the car and no down payment. Come to the store and buy all this stuff. You are increasing your debt, especially if you have student loan. You are increasing your debt. That is going to affect you later on if you want to get some other stuff going. When you come in, the first thing we're going to do is take in your application, which
Mm-hmm.
entails every information about you, and you have to be transparent, because whatever information you give, when we put your social security number on the system, is going to pull out everything. So at the onset, you have to be transparent to your loan originator, because they're going to find out whatever thing you stay hiding, so they can know how to walk you through the process. I have people that when I start with them, I know that their credit is bad. I walk them through the process of the credit. I walk them through the ABC. I tell them, go do this, go do that. I'm not going to pull. Sometimes I look at their credit karma. I say, get me your credit karma. Let me look at it. Because, and another thing is this, that people don't know. There's a difference between the credit you see on your credit karma and the mortgage credit. Is a big difference. If you are seeing on your credit karma that you have 700, on the mortgage credit you're going to be 640 or let me say 660. It's going to be quite different when you look at it. So most times when I look at their credit karma, I can tell them certain things that they have to do before pulling the main one, because when you come for mortgage credit, it's a hardcore pulling. It's going to affect your credit, so you have to really, really be ready, and you have to be informed before they pull your credit. If you tell the loan originator, no, don't pull my credit, they don't have to pull that credit at that time. You have to give them permission. So they take up all your application, then we take all your necessary documents. We take your W-2, your pay stub, your tax return, and we go from there, your bank statement. And we go from there, we pull out the credit and do everything. There are process to this. The first thing is called the origination. The origination is when we gather all the information you need. We talk and we take all the documentation. It's called the origination. From the origination, we go to the processing. The processing is where they gather all those things together. It's like cooking. Gather all those materials together and put them together for a certain kind of dish that you're about to prepare. Then we move it to the underwriter. Then the underwriter is the underwriting is the place where most people don't like. The underwriter are going to ask you several questions. Then from there we move it to what the title company, which is funding. So I'm going to explain all this process. So the origination process is the first time you are talking to the loan originator. He educates you or get all your information about the loan, gives you the pre-qualification. After the pre-qualification, that you find a house. When you find a house, that is when the loan process begins. Because all your pre-qualification and you finding a house, that means your money is about to be allotted to a plot or to a building or to a certain project. So when you find that house, so from there, when you find the house, they gather more information about you. Then the process move from loan origination to processing. Then the processor will begin to call you. All these people are in the same department. Some loan originator can do the same thing, but they are going to be telling you, I'm trying to differentiate when they tell you now you are with the processor. So what the processor does is to ask for you all the documents. They can ask for you all kind of documents. Don't blame them. It's because of what the computer is telling them or what the requirement is saying. They can ask you to bring these. Sometimes they ask some of us that are from out of that came in from another country. They may ask you certain kind of thing. Don't get offended. They just want to be sure about this person that they are going to lend this money to. They want to have documentation, because these things will be kept for like 7 years. Are kept later on. They have to keep those documentation. So when you move from the processor, you go to the underwriter. That is where it gets difficult. The underwriter does not communicate with you. They tell you certain things to bring down. They communicate with the processor and the loan originator, and those won't communicate. The underwriter is the person that is going to guarantee your loan. So do you know what they are? The person to stamp. They will put their name on your loan. So that means they are saying you can hold them accountable for this loan if this person defaults after 5 months or 10 months or 6 months or 3 months. So what are they going to do? They will be looking at the paper, the I, the T, they want the I to be dotted, the T to be crossed, everything. So they ask you all kind of documentation. That is where people get frustrated. All you need to do, just keep providing. Just keep providing. Some you don't have to provide, you have to write an explanation. So that is where I find out in the process, in the loan process, people get so angry, like, why are they asking me this? Why are they asking me this? Why are they asking me this? Why are they asking me? Bring the bank statement, bring another bank statement, bring this. Yeah, because the underwriter has to put his name on that loan, that this person will not default in this loan. So if the underwriter does not know you, and he doesn't know whoever that is working on your loan originator, they are just trying to do their job, that they are guaranteeing the loan. So when you pass through the underwriter, the greatest frustration is in the process of the underwriting. And it's so easy if you can just provide the documents. You know what you want, just keep providing it for them. Anyone that needs explanation, you write the letter. You write the letter and send to them. So when you move from the process of underwriting, then you go to the process of funding. When you pass, when you see a CTC, which means clear to close, that is when you need to dance. You start dancing. That means you have been cleared to close. Then they move you to the title company. The title company, they are different from the loan originator, the underwriter, the processor, and all that. They are a neutral body that will come and agree with, look at everything that is being done. They look at it back to back. They will ensure that there's no lien on your house. They ensure that the bank is not robbing you. They ensure that everybody, they are just like a semi-lawyer. They just look at all the paperwork and everything. They bring everybody together and ensure that everybody smiles at the end of the deal. So now those are the process. I just told you the process through the loan. Now we now look at the type of loans we have. We have the FHA loans. We have the conventional loan. We have the USDA loan. So we have the VA loan, which most people like to do, the VA loan. The VA loan is like the no down payment. The VA loan, you're not required. The VA loan is for those that are served in the military. Those that are served in the military, they have that priority, no down payment, in that loan. But I'll start with the FHA, where everybody, fall under the category. But you fall under the category for FHA if the house in your community is in the range of FHA. Like in Dallas, the FHA for Dallas, the FHA house limit for Dallas is higher than when you talk about in Houston. It's based on county. So sometimes if they tell you are not qualified for FHA, don't be angry that, hey, my friend got FHA. No, the price, the county may be different. Like some county in Dallas, FHA can be $350. Some county in Dallas, FHA can be $320. So you cannot say somebody bought FHA there, $350. No, it's based on the county. And the reason why is this, they look at how expensive is the house there. If you want to buy a house in California, FHA in California can be $500,000. And you say, oh, I'm used to something FHA 3. No, it's different based on the county, based on how expensive things are in that area. So you qualify for that. And in that FHA, we have the no down payment assistance program. One thing I want to encourage us about the down payment assistance program is this. It's good. But if you have the money, put the money down. Because if you do the down payment assistance program, when you stay in that, you must stay in that house for that 6 or 5 years. When you want to do your refinance, when you want to do a refinance of that house, you may not be allowed sometimes have somebody that was trying to do it. It's a good stuff. It enables everybody to have equal rights in getting the house, like to have the opportunity. It's good. If you want to use it, use it. But I want to encourage you, if you have the money, because some people, they have the money, and they use the money to on something else. I want you to know that one of the greatest investments you can invest in yourself in investing in a house, not an apartment, because the same amount the apartment, the same amount, you can never go to the owner of the apartment and say, I'm broke today, I want to do cash out refinance. You can't do that. But when you pay into the mortgage, you are saving. There is a savings account. Some people withdraw 200. Last year, I know of a woman that withdrew 100,000 from her house. 100,000 from the house. Can you imagine? She had been saving. So the mortgage you pay is like you are saving into the house, and you still have the house when you do such. So you cannot do that in the apartment. So if you know you don't have that down payment and you want to buy a house, and like especially now is the best time to actually buy, because the interest rate, as for last year, interest rate was going into the 5 point something. Right. Some people have credit score. I did a loan last year that the person had a credit score of 740 and their interest rate was 4.2. So the person now, I want to do a refinance for him. I'm going to do a refinance for him for 2.5. The same credit score. So if you're looking at buying, I know some of us spend money in what is not. Like, cars, no. I want to tell you now, spend it on buying a house, buying something, investing in your future, investing in something that is yours, something of importance. Invest in something. Some of us don't know about buying a house now, having a life insurance, or having some of these things for your future. That job that you are doing, you're not going to be there forever. You may not have that strength. So take advantage of this opportunity, because we don't know when that interest rate is going to go up again. It has come down to a level. Somebody actually, we closed somebody with 1.99. What is that? That is no interest rate. It's like the bank is dashing you that loan, and you can still go down. There's still something lesser than that 1.7. You can get that. You can still go. It depends on the market rate that day. So take advantage of it and get it. So if you know that you want to buy now and you have not been saving, you want to use the down payment assistance program, go ahead. It's a lovely program. You can go ahead with it. But don't be in a hurry to want to refinance the house. Don't be in a hurry to want to sell that house, because you have to pay back that money. There's a way they're going to get it back.
Okay, wow. So I could let you continue basically talking and take over the entire show, because the information that you've provided, just a little bit of what you've said, is amazing. And I'm here sitting down and thinking, are we even going to cover everything on this one segment, or should we? Because what you've made some very important points. And if you've ever watched, or if you ever go back to watch any of my videos, a lot, basically word for word, what you're saying about investing into things that matter. I've covered it before. And yourself, just like Agent Dan and just like myself, we are really trying to sensitize either our community and the wider community of people who don't know, to start investing in things that matter. And generally, you would have to pay for this information, but here are professionals, right? Professionals are sitting here giving you this information for free. So if you have family that you think need to hear this, I would even say come back to this video again and re-watch it, because there's just a lot of things that Benjamin has covered, from the pre-qualification stage, origination to processing. So at origination, you would need your W-2, your pay stub, your tax returns, and your bank statement. You mentioned bank statement?
Yeah.
Yes. So you're one person who this is not calling anybody out, but if you're one person who keeps getting overdraft left and right, and you're not being fiscally responsible with your finances, just know that when it's time to buy this house or find a property, your bank statement is going to need to be provided, and all that information will be seen. So it's, as much as you're working on cleaning up your credit, clean up your banking history as well. And apart from that, he talked about your mortgage credit being different from your regular credit scores. And I was going to ask you, where can one view their mortgage credit before they go in? Is that possible?
Yeah, it's possible. You can view it on several platforms. You can go to any of the credit bureau and ask them you want your mortgage score, instead of them giving. Yeah, you can go on. There's what they call My FICO. You can use that app and get your mortgage score. anytime you want to buy a house, ensure you see you want to get your mortgage score, checked.
Okay.
Mhm.
My
And
FICO. So I was posting
my
that.
FICO, you can check that my FICO. There's a little app. They have the app. You download it and use it. And anytime whatever score you have right now, just subtract like 40 points out of it. You'll know, like in the average, where you can fall into to be able to do that. So it's a privilege to share some of this information, and I want to appreciate you for what you're doing, because a lot of people need to know what to invest in. They need to know. And like, there are things going on now. It's very it's a favorable time for you to get into properties and things like that, to own one. Right now is a favorable time to do it. And this platform is good, educating everybody. You can go back and watch the video, like I was talking about the different kind of loan. Like with my own company, if you have your W-2 and your pay stub and your bank statement, we get you. We don't even check the if you are a W-2, you have a W-2, we don't even check. And let me put this real quick so that people can know what they qualify for. This is the formula how you get what you qualify your mortgage will be, the highest they can give to you. If 50% of 55% or 50% of your monthly income, so if you're earning 5,000, just do 55% of it. Whatever you get, if you don't have any debt, that is the highest mortgage they can, a mortgage that you can ever get at that income level. So 55% of your income equals your mortgage, your monthly maximum mortgage. But if you have debt, now subtract your monthly debt from that result you will get. Your monthly debt, maybe $5 from Ross or something, whatever card, debit, Capital One, Discovery. You start subtracting from what 55% of whatever thing you get. 55% of your income should be your mortgage, your maximum mortgage. But what will reduce it is your debt. So whatever thing you get from the result, subtract all your monthly debt that you have to pay, like your credit card, your car note, your student loan. Start subtracting it. And if you want to get a house and now you have a student loan and you don't have a monthly payment on your student loan, well, we are going to use 1% of that entire student loan. So it's better if you want to get a house, get the phone and just call your student loan. Can you put me on the plan real quick? When they put you on a plan, if they put you on a $100 plan, we're just going to use the $100. That is better for you than to tell the lender that, oh, I've deferred it for a while. It's good to defer it. They're going to use 1%, which is higher than. So it's better to have something. Just settle with them for $50 every month, and you get that stuff $50. And for those that have a bad, they spend a lot. I know some of us, we don't know how to. Some people don't know how to spend. Amen. The first person you must pay is pay yourself. You must pay yourself. I'm telling you, you must have money for three reasons. When you get your paycheck, just divide it into three places. Transactional motive. Anything that the basic thing, your need, you must keep for them. And let it be that is that you must keep money for what? Speculative motive. That means anything for investment, you must keep money. You must keep money for the third thing is this precautionary motive. Something happened to you suddenly and you are walking, you are not looking for somebody to help you. They will just tell you, everybody will listen to your story and say, we don't have. And especially if they can just tell you something like, hey, yeah, because you know why they are saying that? They know you walk. So the first person you need to pay is yourself. So you have to watch your bank account. For those that don't have that, like she talked about overdraft in your bank account, we can still do a loan with those bank accounts that have overdraft. All we want to see is the income coming in, but you have to just write a letter to back it up that, okay, this so thing event happened. That is why I have overdraft. So event happened. So I don't want those that feel bad that, oh, my bank account is always overdraft. It's always overdraft, but we have to look at the income coming in and all that stuff. But you write a letter explaining those overdrafts. Because if you are going overdraft like that, they want to look at it. What about paying your mortgage? That means you always spend. So I know money is, if you have 1 million, if you take just $1 out of it, you are not a millionaire anymore. So when you think about it in that way, it will help your spending level. Help your spending level. Then we have from FHA, we have conventional. The conventional loan, loan whereby in some area, conventional loan is versatile. That means if you are not qualified for FHA, you can go to conventional. And then the USDA loan, so many people ask me about that, except you live in a rural area. In a rural area, like in a farm area, and you want to live there, those loans are good, very good. That is it, good. But the conventional loan, if you're not qualified for, that is why don't be discouraged when they tell you you're not qualified for FHA. Ask your loan originator, am I qualified for what? A conventional. A conventional loan, there's a conventional loan for 3%. I know some of us don't know that, which is lesser than the FHA, because the FHA is 3.5 down payment. Conventional, there's 3% down payment, and there's 5%, there's 15, there's 20 even, depending. So if you're not qualified for FHA, ask your loan originator, am I qualified for conventional? The conventional should be able to accommodate you. One thing about conventional is this: you must have a good credit score. And somebody may want to ask, what are the credit score right now to qualify for loan? The first one is this: now for you to qualify for FHA, 620. But there are some banks that want you to have 640 now because of the corona. Before corona, some banks were taking 580. Some banks were taking 5, but now corona, people are losing their jobs. So they want to know that this person is going to get a house, is a credit worthy. What your credit speaks about is that you are worthy to have a new credit. So 640, some banks 620, but the standard is 620. Then if you want to go conventional, some bank will tell you 660, but the minimum is 640. Some banks can take for 640 for conventional. But the thing is this: it's a very tight one, So it's good for you to work on your finances and all that. I don't know if I still have time, because if you let me, I'll keep educating us back to back.
I think what I would have to do is sometime, maybe not this year, because I know you guys, you're a little busy, but if you find some time that you think you can come back on for like a 30-minute educational segment, I would love to have you again. So maybe in the new year, maybe.
Anytime I will. Anytime I'm given the privilege to educate people, it's my joy. The reason why I and my wife went into this, we love putting people in homes. We celebrate people being in it. We celebrate people being in it because that is a blessing doing it. So we are passionate about it. So at any time, when you call, I'll try to schedule. The reason why my schedule is, I'm a pastor, I'm a father, I do this and all that. So there's a lot of activity. But when it comes to making the life of people better, that is what gives me joy. Adding value, like what you do, adding value to the life of people, because it doesn't profit us to devalue somebody. The best thing we can do for every one of us is to increase our value, us get to that dream destination. So I'll be glad to at any time.
Perfect. And I thank you so much. And you've covered FHA, USDA, conventional, VA loan, and just a VA loan note. It's generally for military, former military, current military, but it's usually for military. But anyway, let me not. I certainly appreciate your time. I know that you have a wealth of information, and I'm going to put up your business card. If anybody needs to reach out to you, when do you see in this home buying process? At what stage do you become a architect? So you talked about origination, processing, underwriter, title. Where do you fall?
Or I think I couldn't get.
Sure.
There was a break in communication.
Okay, sorry. I was saying, where do you fall? You talked about underwriter. You talked about origination, processing. Where do you fall? When do you see people?
Oh, okay. I do, but like my company we are a broker. A broker, there's a difference between a lender and a broker. So we're broker. So what the broker is, we are like the Walmart. So when we tell people sometimes come to the broker, they say, no, my bank. The broker is always better than your bank. I always tell you that because we are Walmart. We have several banks begging for clients from us. So
Mm.
sure, we can take your loan from this bank that tell you no and take it to this and take it to. We are open to them all. So we have them and we know the best one. So that is where I fall as a broker in the loan
Okay.
industry. So I can originate, I can process the loan. And the only thing is this, I found, the funding will be done. I cannot do the job of the title company. So the title company is different from me. So I can walk you through every part. But to create a job, we have a processor. So you create that job aspect out of it. But I'll be able to go through all those process for you, even if it is with the underwriter should be able to tell you what to do. I'm able to interpret whatever the underwriter wants you to provide and guide you on how to reply or what to provide.
Perfect. And I thank you for the information that you've provided today. A lot of what we're talking about is general informative knowledge. Now, each client's situation is different. So I would really encourage you, the viewers, anybody thinking about this process, reach out to Agent Dan, reach out to Benjamin, get more customized information. And I'm going to put up his business card. If you want to reach out to him, you can come. Is that okay if I do that?
Thank you.
Okay. It's going to cover us for just a little bit, but here it is. I wasn't sure how to make that bigger, but if you can read that, here is his information. If you're not able to write this down very quickly, that's no problem. You can reach out via the comment section. Are you on Facebook? Do you have a business account?
Yeah,
Or
I'm on Facebook, the same Benjamin Oluwole.
okay.
I'm on Facebook and also on Instagram. But that is my personal Facebook.
Oh, okay.
You can also get me on that also.
Okay, that's no problem. But here is his information. If you do need it, please reach out to myself or reach out to him directly or even Agent Dan, and he can provide that to you. But any last words before we call this a day?
What I want to say to Ross is this: increase your value every day. Increase your value. Increase your value. Take advantage of all this information. If you are not informed, you'll be deformed. Information is so important. When you have a segment like this that you can get information, don't trade it for something that you just want to have fun. Get information so you can be transformed. So many of us are sitting on a gold mine, but because we don't have that information, so many people are qualified to buy a house because they don't have the right information. They are just there, just being a tenant forever. So you get information is so important. Take advantage of the various programs. Don't say one is bad for you. Attend to them all. They are all tailored to get you into the program. And also get financial education. It's never taught in school. You learn it in platform like this. Financial education is what everybody needs. They tell you to work, but they don't tell you how to manage your money. Then you work and you don't make it and you become poor and you cannot equate your career to whatever. So financial education is so vital. As you learn every other thing, learn financial education. Thank you very much.
Perfect. Thank you so much. And you couldn't have said it any better. Very quickly before I let you go, you did mention the fact that you were a pastor. So can you give us more information about that for anybody looking?
Yes, I'm a pastor here in Houston, Texas. Father's House International Worship Center. Yeah, in Houston, Father's House International Worship Center in Houston, Texas.
Perfect. What's the address?
It's 14360 Bel Air Boulevard, Suite 103, Houston, Texas, 77083.
Perfect. Thank you so much. And I certainly appreciate your time. You're a very busy person. I look forward to having you again on the show. And you've blessed us with a wealth of information. And I certainly do appreciate it, Benjamin.
Thank you.
Thank you. And have a blessed day.
And you too.
Thanks. So, wow, that was a lot of information. And I think I may have to go back and do a recap and post some important points that were made. And I certainly do appreciate you for hanging on. I'm going to bring on my other guest, Agent Dan, who has been patiently sitting in the background waiting for me to call him on. But I'm sure by now he's had his cup of coffee, he's woken up just a little bit to just blow us out of this place with the knowledge that he's about to drop on us. So everybody, welcome again, Agent Dan, and Agent Dan is ready for us, correct?
Hey guys.
Well, welcome back. Thank you for being very patient.
Sure.
And also, the information, I know you were listening to what Benjamin was saying, but the information he provided was so vital. It was so very vital. And I am very grateful he came on. So in just a few minutes that we have left, I know that the last time we spoke, we were talking about we talked about the home buying process, buying newly built, buying an already existing home, or building from scratch. So are there any other things that we left out? I know we weren't able to answer a lot of questions. So give us more detail that you feel like we weren't able to cover the last time we spoke.
Yeah, I really do not know if there was something we did not cover, but I can tell you, two things that we largely usually focus on. There are two segments of the market. It's either a new construction home or it's a pre-existing home, right? And typically, Benjamin would mostly fall in the part of pre-existing homes, even though they do new construction loans as well. And that's because most times the builders have their own in-house lenders and they try to be as competitive as possible when it comes to offering you deals like maybe waiving your closing cost or, just giving a few things here and there to be able to sweeten the deal. So for pre-existing loans, really, Benjamin, we work with him and he is often very good about getting your pre-approval, making sure that, you are going to close on that house that you want. And to speak a little bit about him, I mean, you guys can clearly see he is as passionate about, empowerment and getting into your home as I am. This is what we do. I mean, you have to partner up with people that that share the same values as you do. This is just an assurance on our part that, if we work with you, we have your best interest at heart. We are not going to leave you halfway. We are not just doing this, just because we lack something to do. We do this because we have a goal, and that goal is to make sure that we are all empowered. We are financially able to be, to be in a position to be able to do things, to be able to impact lives. So that is what we do. We enjoy it. We love it. And anytime you call us, we are going to answer our phone and make sure that you are taken care of.
Perfect. Well, again, like I told Benjamin, I want to thank you also for taking your time to just go walking us through this process. Now, the other question I was going to ask is this, something that was I was burning a little bit more in my mind. Now, one of the things I'm finding is you have people who maybe they have a good job, right? And they're buying their first home and they think the bigger the home, the better. The bigger the home, the better. As an agent, what do you have to say about that?
One of the things that I've learned over time doing this is I try not to judge, right? It is not my place. It is not my place to, and part of it, it gets even more maybe complicated when you know these people personally, right? On my part, when you're coming in, if you already have your pre-approval, that tells me that the bank has done their job and they know that you can qualify for this house, right? So my goal is really to direct you towards finding the house that is right for you. Where I have an issue is if you show up and you tell me you want a $500,000 house and you are only pre-qualified for 350. That is where we usually have a problem. But if you're showing up, you already have your pre-approval. I am assured that you can pay for this house. And hey, I'm from Texas. We say everything is big in Texas. We like it big. If it's small, then it's not Texas, right? So the bigger it is, the better. I part of the, I mentioned this the last time we spoke, right? My goal is to have a well-rounded individual financially, right? And in the course of having those conversations, I'm also talking with you and making sure that you are not spending all of your income on the house, and you're doing other things. You're investing your money, you're saving for your kids' future. You have other financial instruments that if things were to go south in other areas, you would still be able to live, right? You're not going to get kicked out of that house. So knowing these people, knowing the people that I work with, and being able to communicate with them, being personable, being friendly, I think we are able to have frank conversations at times. And if it's not going to be financially sound to buy that big house at this point in time, get you a house that you can afford now that meets your need, right? And few years down the road, the houses are always going to be there. I mean, houses are not going to go anywhere. The one that you buy today could become your first rental, right? When you do eventually upgrade, you can rent the one that you're buying today. So my goal is, not just to sell you a house and then, you're buried under a mortgage. My goal is to make sure that, you're making a sound financial decision for you and your family.
And you do raise a very important point. With all the clients that I work with, especially in this environment, I see a lot of refinancing. And I see a lot of people, either young couples or couples that are in their 40s, they do have rental property. And how do they have rental property? Sometimes 1, 2 different homes, and a lot of times they're condos, either condos or small family homes. Why? Because maybe in their younger years, they bought those as their first homes. Now that their income has also increased and they have larger families, they're transitioning over to their dream home. So generally, people don't buy their dream homes right off the bat. So as Benjamin talked to us about buying a home, it being a feeling, it would be great to enter your dream home right off the bat, and that's it. But you also have to consider that your tastes are changing, your family needs are changing. So as your family gets bigger, you may want something else than you thought you wanted today. So if you end up just getting into a home that may not be your dream home or your forever home, that's all right. As time goes on, when you can afford that dream home, you can put that home on the market in terms of renting it. And that can become a source of rental income for you. And you're also building equity in the house. So I just wanted to point that out as well. Thank you for answering that question. I know as an agent, you can't really take sides. But the most important thing, just like you said and Benjamin said, education is key. As long as you're being educated and you're educating your clients, the final decision is left up to them. Just like me, I can advise for investing and the like, but the final decision, it's your money, it's your life, it's your choices. The final decision is left up to you. Now, we're going to pause here for a second and see if anybody has a question. Let me go through the comment section. I know I'm going to start from bottom up. Loveline Aqua says powerful. Welcome, Agent Dan from Cynthia. Information is key. And thank you, very educational. Well, thank you, Horin, for joining.
Horin is Ben's wife. Horin is Benjamin's wife.
Is. Thank you for letting your husband come on here today. I certainly appreciate it. He was a wealth of information. Thank you. Okay, let's see. And I posted information of conventional loan FHA, and I can go through and post some more. Mark Fundus says debt to income ratio of 43% and below is great, but below 28% is perfect. If you can't stay under usually a lot of things, you give yourself a little bit of wiggle room just in case an unplanned event happens. So the last one is exactly. He's dishing out a lot of information for free. I wish the whole Cameroonian community, and not just the Cameroonian community, but all of us, both whether it's Cameroonian, Nigerian, African, I'm very passionate about immigrants as a whole. I wish we all could educate ourselves. Very informative. Thank you, Belinda. And Cynthia says, definitely investing in property is such an important thing, and you can pass it on to your children and start building generational wealth that way. There you have it. we cannot emphasize this very much. YouTube says, Paul says, thank you. Are there any questions? If there are any questions, please post down below. Now we have them for free. Let me put it that way. Time is not free. The fact that they're here, they're giving up other things that they could be doing, and I really want to appreciate them and make it worth their while. So if you have any questions, please post it down below. I don't see any questions, so why don't I do this? Let me give you back the gift of time and let you go run off. It seems like you may be having a busy day today. So I'm just gonna let you go run off, get what you gotta get done today. And I certainly want to appreciate you again. This is not over. There is next year. There are a lot of more things coming on down the road. The interest rate environment we find ourselves in is a very low interest rate environment. So I promise you, I'm going to come knocking again.
Hey, Phoebe, you know where to find me.
Any last words for us?
This is what I do. I enjoy doing this. Anytime, I have no hesitation. I have no hesitation helping, especially the members of my community, being able to buy their
It looks like we're
homes.
losing him, but that's all right. He had already mentioned that his internet connection may be a little spotty. Are you back with us?
I am here. I wonder if you can hear me. Can you hear me?
Yeah, we can hear you
Okay,
fine.
awesome. Yes, I was saying I enjoy what I do. I love doing real estate. This is I say this over and over again, right? You are not here by mistake. You are here for a reason, and what you do about the opportunities you've been given can determine whether or not your future and that of the generation that comes after you is going to be on a better footing, right? Just because you worked overnight when you came here, you worked overnight at Walmart and did worked in the nursing home. I'm not necessarily saying that these are bad jobs, but I'm just saying it's onto you to determine whether those that come after you and your children get to struggle the same way you struggled. You have an opportunity here to be able to build a foundation, a solid one, that those that come after you are starting from a higher rung on the ladder. So it is up to you to be able to do that and be able to use the opportunities that you have been given wisely. And there is no doubt that having a place that you can call your own piece of dirt, is very important. And my goal is to ensure that you have that space, right? And you don't have. I lived in an apartment. I had kids, and my neighbors would always bang on the floor because the kids were playing. Now nobody can bang on my floor. My kids can play. They can scream. They can do whatever. There is freedom. There is no stress. It's a joy, and a lot of people do not know they can afford homes. I am here. Benjamin is here. Give us a call. We would work with you from start to finish. We are not going to leave you halfway. We'll make sure that you get that place you can really call your home.
Perfect. Well, thank you for those last parting words. I think we have a question. Do you encourage non-spousal co-borrowers? I think this question would have been awesome for Ben, but do you have anything to say about that?
I can say that because that's something I encountered just this week. It every now and then things happen, right? Job loss, reduced hours due to COVID, whatsoever the case might be. And you have a home with the house is under contract, and chances are, my client can lose this house, right? So in order to make sure that this deal goes through, we have to find a co-borrower, which is the route that we took. And either spouse cannot stand on their own on this loan. And with one spouse, on the verge of losing their job or having their hours reduced, they have to find a co-borrower. Now, it's like anything else, the same as buying a car, you're finding somebody to co-sign on that loan. First thing, the individual has to be willing to do that, because of course, if you fail to pay, that individual is on the hook as well. So it depends on how comfortable you are with that person. It depends on how comfortable that individual is with you guys as well. That individual is listed on the loan. He or she is also a party to that house. I mean, it's all about relationships. How comfortable are you guys doing this? If you're comfortable doing it, there is nothing that says you cannot do it, right?
And that's true. And I do also know that you have people who are not linked in terms of they're not spouses, they're probably siblings. They're coming together, or they're probably just friends. They're coming together to purchase a home, and that becomes like an investment property or something of that nature. So I know it's possible. You would just need to work out, like Dan said, that relationship aspect, because you can have it has a tendency to go south, just like anything else, whether it's co-signing or loaning a car, or anything that you have to sign on credit for. And you also have to make sure that the person that you're doing it for is trustworthy, vice versa, because you both would own the home, essentially.
Yes, absolutely. Let's leave it at that. I could talk some more about that. I mean, I have, this is where your personal views and what might happen in business, could be
Yeah.
different, right? So, yeah.
Okay, no problem. I mean, we can't catch everything here on the show, right? So
Uh,
somebody's asking, what do you consider good income when trying to buy a house? Um, Now, go ahead if you can answer this. Benjamin, if you're available to comment on the question directly on the chat, that would be also awesome. But go ahead, Dan.
yeah, I mean, from my experience, it's the question is weird because I mean, what is good income? The one important factor, as Benjamin had mentioned, the debt to income ratio, right? So you can buy a house. It depends on the market that you're in. Let's say you make $1,000 a month and you have zero debt, right? And if they do a debt to income ratio calculation, well, in this case, you have no debt, but you have all the living expenses. And from an income of $1,000, how much house can you afford? Let's say even if it was 50% of that, $500,000, $500, sorry, per month. How much house can that buy you in Dallas, right? You can hardly be able to
Right.
afford a house in Dallas. Now, if you're in Iowa or in Idaho, someplace like that, possibly you could be able to get a house, right? So it just depends on how much money you're making and how much house you're trying to buy, and of course, whether or not you have debt.
Okay. So this is so tough to answer. Somebody, thank you, Agent Dan. This is so tough to answer because okay, that's the other question that was asked before. I'm going to put that down so we can focus on the initial question. You're right. It depends on your income. So in order to know what's a good income, the metro area you want to buy the house in, the cost of the house, and the actual income that you're bringing in every month. Those are the things that you have to factor in order for you to determine exactly where you need to be for the home you need to get. And you also want to factor in how much mortgage can you qualify for, because you can have all the income you want to have and maybe not qualify for the type of mortgage that you're thinking you're going to get in order to finance a home that you want to buy. So there are many different things that you have to put into account. We are running fast over the hour. I want to bring this to a little bit of a close here, but we have a comment. This is so tough to answer because relationships can change and your non-spousal relationships can become very sour. You need to ensure you protect yourself now and for the future. Have everything in writing legally and decide what will become of the property borrowing should your relationship turn sour. That's very great advice because I mean, like you and I know, even spousal relationships go south, right? And then they have to go through the whole deal of who gets what and what stays with who. So those are some of the things you want to be cognizant of. However, I think we're going to end it here. Um, with the 100 salary target, your target should be secure now.
Yeah,
All right.
that was quite some levity in a situation like this brings. Yeah, I think
Okay.
I did the best answer really is talk to a loan officer or contact me. Each situation is unique. Give me a
Yeah.
shout. We can look at your situation and definitely get you a house based on your income.
Okay, perfect. Well, thank you for that humor that Prince. It was a good laugh. But I want to thank you. I want to thank Benjamin. I want to thank your spouses for letting you guys for taking away an hour of your Saturday morning. And I certainly appreciate it. Agent Dan, Benjamin, thank you both so much. And I hope you have a great weekend. And before I do that, I do have your card, which I meant to share. If you want to get in touch with Agent Dan, there it is. There's his information. Let me get this comment away so it isn't blocking. There's his information. You can connect with him, Agent Dan DeFournier, Realtor, and you can give him a call, send him an email. He's on Facebook as well as Agent Dan. So information, that's your information if you need it. But I want to thank you guys for sticking with both Agent Dan and Benjamin. I'm going to let them go. I'm going to wrap up with one more thing I want to cover, and then we can call it a Saturday.
Thank you, Phoebe.
Have a good day. All right. Well, guys, thank you so much for your being patient with me today. There's one more thing that Benjamin talked about, which is being able to do a cash out refinancing. And he said that, and it triggered something in my mind because I did actually have a client who did that. So, I mean, there are many ways for you to look at this home buying thing. It is truly an investment. It is not only an investment for the present, but an investment for your future and for your kids' future. If you're very business inclined like myself, and maybe sometime down the road, you come up with a great business idea that nobody will finance for you. And if you have a lot of equity left in your home, or if you have a lot of equity in the home just because you paid down so much into the home, if you do decide to do a cash out refinance, and when you go up to refinance your home, you can take some of that money, put some of it towards that great business idea. Now, granted, you do have to do your perfect due diligence to kind of make sure that that idea is solid, because the worst thing you want to do is put money away for a business idea and it falls through, right? And you're going to be in the whole 50,000, 100,000, whatever have you. So these are some of the things to start thinking about. This is how we build wealth. Long story short, this is how we build wealth, amongst other things. So I want to thank you guys. Today was a great session. If you do have any topics that you think you want us to cover, you have any amazing guests that you think would be great to come on the show, please let me know. Post down below, reach out to me personally, and I love having people come on and talk to us about more stuff. So in the meantime, I'm going to let you all go. Have a great Saturday. I'm going to be posting more information about the next session we're having. So right now, the way it's working is every other week. November is right around the corner. Actually, November is tomorrow. And so we're going to be having a holiday Christmas special. So Thanksgiving, Christmas, New Year, we're going to be having a Christmas special. Just have that in mind. So we're going to talk about more great topics that have to do with the upcoming Christmas season, the upcoming holiday season. All right, well, without much further ado, my name is Phoebe with Frugal Phoebes again. If you haven't shared the page, please do. You can find me on Frugal Phoebes, Facebook, Frugal Phoebes, YouTube, and Instagram. Okay, subscribe if you haven't yet. I do love having one more subscriber to my channel. Other than that, have a great weekend. Have a great day. God bless you. Bye-bye.